Okay guys, like I mentioned, I'm going to be showing you today how to maximize every single trade. I'm going to be using gold for the example, using the break and retest. I'm a strong believer of key levels. These numbers here on the right side, they're there for a reason. So I mean, I only use key levels. Even in my mentorship 1-to-1, I only show key levels, right? I put a huge emphasis on them. Now I've got, gold, which you're going to be using for the example, and I'm going to be showing you something, guys. For FTMO, this is a small 10k account. If I just it's the first trade of the account, and if you can see here, FTMO account, this is phase 1. And why am I using a small 10k account? Now I always like to keep my emotions involved, but I've been recently back testing oil. And oil, if I just show you here, what am I aiming for is a 1 to, I'm risking 0.5% by the way on this trade. Like I am, even when I teach risk management, your first trade should always be 0.5%. But what I've seen here so far is 1 to 8s are normal. It's average, where you're going to get 1 to 7s, 1 to 8s with oil. Now if I just show you, well, let me show you some of my back tested data with oil before I get into the meat of the topic for today. So I mean, you can see here, right, this is oil, guys, and if I mean, this goes on and on, right? But I mean, even if you look here, 1 to 8, 1 to 8, see what this one is, 1 to 8, this is a 1 to 6. Okay, I'm not complaining. 1 to 8, 1 to 7, 1 to 7. But these 1 to 7s here, I'm not actually, moved them to 1 to 8s, because they actually do keep going on for a 1 to 8, as I've realized. But still, I'm testing. I mean, even a 1 to 7 is absolutely insane, guys, but I'm going to be using a small FTMO account just to see how, I mean, even if I lose this trade, guys, how insane is it that, let's look at it, I only need 2 trades to be profitable out of 10. So let's look at it, let's do the maths here. 2 trades, 1 to 8 RR each, that's 16%, right? 2 trades, which are both your winners, that's 16%, minus the 8 losses, right? How insane is that? I still have 8% to walk away with. That's insane. So what I'm going to be doing is I'm just testing this out. And I know, the thing with, I mean, it's a Monday, guys, so volume is low. That's why oil is moving quite slowly. I mean, you can even see by the pips, like, how small it's. But I mean, if I pass the account, perfect, great. And I'm just going to be refining, seeing what's the perfect stop loss to use for this. I've already worked it out. I do have an idea, but I'm risking 0.5% on this, as you can see. Let me just show you. As you can see here, only $50 I'll lose if I lose the trade. But if I win the trade, I'm looking for 400. But how insane is that? Even though if I just only risk 0.5% per trade, and I consistently aim for 4% per trade, how insane is that? That means I'll have 20 lifelines when it comes to drawdown. I'll have 20 trades on my disposal, combined even with a 1 to this is like a 1 to 4 in my eyes. Like, normally me, GJ is my bread and butter, but I would normally have to risk 1% and aim for the usual and average, and my students know what I'm talking about, 1 to 4. Now if I even show you in the mentorship, guys, if you are, by the way, interested in joining the 1-to-1 mentorship, well, let me just show you some of the live trades that myself and some of the students took today. I mean, you can see here, guys, full on transparency. I mean, even in the 800 plus members, guys, right? The link will be in the video description if you are interested in joining the 1-to-1 mentorship from myself. This is where the funded certificates, and this is in the free section. Why? Because it's all about transparency, guys. It's all about transparency. If I just show you the trade I took today, this was a live trade that I took at 8:51. So look, let me just be fully transparent about this trade taken at 8:51. And if you look at this winning trade here, if I just show you 8:51 at 9:12, right? Almost I would say about 20 minutes later, it hits a 1-to-4 clean, but it keeps on going. Oh, actually, it was sooner, actually. 9 o'clock, pretty much 9:03, it hits the 1-to-4, and it just keeps on going. But at the same time, guys, I also post my losses. This was another trade. I lost 0.5%. It's all good. We move on. You're not going to win every single trade, and just like that, you're not going to lose every single trade. So anyways, coming back to the point now, let's get back on track. So if you are interested in joining the mentorship, guys, 1-to-1, it is a lifetime access, one-time payment. And yeah, but I mean, you get to change your trading career, pretty much forever. Okay, so let's get back on point. I was using gold. Now I've got all these other currencies here, guys, because I'm always look at all these GJ charts. I'm a student of the game, always back testing, forward testing, everything. And then I mean, it's because of this reason, because of just putting in the hundreds of or thousands of hours. I've been doing this for pretty much 8+ years that I've been able to be in the position I am today. Now let's get to gold. And okay, so I've already marked out my key levels, and if I show you guys, let's go on the entry, right? So these are the major rejections what I saw, and if I just bring out the smaller time frames, which I like to do, and just to be clear, guys, on my I have the break and retest, I refined it to be uniquely my own, and that is the only one I show to my students. The break and retest I show over here, it's not the exact one I personally trade. Now major levels were drawn. Now normally I normally draw the zones like this. But then I mean, I've actually come to a point where I don't do this anymore, and it just simplifies everything. If I just it's much simpler if I just keep the lines. Okay, so what do we have here? As you can see clearly, guys, I have a level over here of a a respected area, and we've got a huge engulfing bullish candle. Now look, what do you see and notice about this candle? Let me just mark it, highlight it, so you can okay, the previous candles were failing to break above, except for this one here and except for this one here. But what do you notice though? As soon as you get a bullish candle breaking above, right, the market just tanks it back down. As soon as you get a bullish break above this, the next candle is a bearish candle, and the market just tanks all the way back down from there. Afterwards, look at this huge volume in this candle here, right? Huge volume in this candle. So what I'm going to do is, let me put this in a bit of a playback so you can have a better understanding of this. Market always leaves clues, guys, always leaves clues. So let me just bring up, let's see what other clues there are. Okay, it's not going to let me go that far back for the 1 minute, but for the second minute, the time frame we're going to use, huge push to the upside, market comes back down, and it pretty much comes near the zone, right? But I want some levels of, I mean, there's another engulfing candle here, there's another you could call this a morning star pattern. Price comes down here, creates a wick rejection. I mean, I would pretty much like to get in from once price comes to that key level again. Now, and even if you look at how to say key level, I mean, it's normally not always a fixed price, but it's a area. And as you can see here, just one moment, price just comes into this area and just shoots back up. Now if I press play from here, guys, market, you just let market do its thing, and price just flies all the way to the moon. Not the best, of course, but it does head in the desired direction. Now, I mean, that's insane. It just spikes from there. And this is why gold is a famous trading instrument by majority. I think it's one of the most profitable about that. Again, it's one of the most insane ones out there as well, and this is why it comes with a lot of risk as well. It's supposed to be known as a untamable beast, but I think break and retest strategy, guys, is one of those strategies. It can do that. It can tame it. Okay, so now let's move on. So price has now come to this level here, presenting a opportunity to take a buy. Now, and it just breaks through, right? It was showing an opportunity to take a buy, and it's just gonna call this a fake out, call this being wicked out, and you just lose the trade. But again, it's totally fine, because I mean, look at this, winning a 1 to 13, but on average with gold especially, like to just aim for a 1 to 5, just keeping things normally on 1 to 4, but on just sometimes letting it run 1 to 5. But I mean, even if you win a 1 to 5, guys, 1 to 4, and you only lose one trade, you've got to keep going, right? It's all a game of probabilities. You don't care if you lose the trade, you don't care if you win a trade. You can't be having euphoria and just getting gassed just by winning 1 or 2 trades. And I don't want to say you want to become a robot, guys, because as humans, from day one we've created with emotions. It's for me to say you just become a robot. It's not going to work, guys. You have to be able to it's like a boxer, right? I'm going to use a sport as an example. Imagine if you're a boxer and you keep taking on damage. Now for someone to say you have zero pain, it's not going to work. You're still going to feel the pain, but you just become more durable to it. Just like that in trading, when you lose a trade, yes, emotions will kick in, but you got to learn to adapt and learn to evolve and just learn to absorb just those hits. And just got to look at it as you're making a small investment into the market just to get bigger returns, simply. Okay, market keeps going. Now let's get to this point over here. Now there's an opportunity here, and this is why I marked it over here. Now you're probably thinking there's a breakouts, you know, over here. There are, I mean, because I can see clearly if I just show you this. Look at this bearish candle. It's a breakout, yes, but I mean, even if you look at this too much, I'm looking for a rejection as well, but there's not a rejection, but then I do see a rejection with this one. So let's zoom in, and there is a one more. Let's keep this going. Did you see what happened? Now we're going to use a small time frame to refine over here. Price does come down here. Price does come down here, guys, but then we've got a bullish candle. Now this is one of my favorite patterns. Why? I call it the equal low pattern, and when it's of opposite equal high. What do I mean by this? Equal low, because it's equally low from the bottom. Look at none of the candle bodies of both of these candles close below this line, for example, right? So just mark it like this. Price comes back up, it comes down here, and it creates this bullish, you know, this is this one here, you can call it the rejection candle. This one here is just a perfect one, but let's go to a small time frame, because market will give us some, I mean, look at this huge engulfing bullish candle. I mean, after that you definitely just take the entry, and then this just gives you an extra confluence, this strong bullish long wick rejection. This is like 100% candle strength candle over here. This just gives you confidence just to hold the trade and let the trade play out. And you would rather lose in a trade where you followed all your rules, that is still considered, you know, a good trade, if you was to lose the trade even though you followed all your rules, rather than fluking a trade and making money and you don't even know why you won, right? So anyway, this trade just keeps on going, and beautiful, right? I mean, with the opportunities with this trade, it's like with this strategy, sorry, the break and retest, I don't care if you're a beginner. I don't care. I'm going to be dropping a video as well, guys, for beginners. Been getting a lot of demand. So I mean, what's this trade? A 1 to 12, guys. Remember that first loss that happened before? Does it really matter now? And like I mentioned, 1 to 4. And if I even bring out the ruler, how much time did it take? 3 hours 30 minutes. Insane. So let market, I'm just going on the bigger time frame here. Now sometimes you might think there's breakouts here, there's breakouts here, there's ways I show in the mentorship, guys. This is, in my eyes, consolidation. This is why I ignore these whenever I post these videos, and you see me ignoring this is why I exactly ignore these, and then I look for clear opportunities to take entries and trades. And this is why I clearly show in my one-on-one mentorship. And I mean, this is a much cleaner breakout over here. I'm getting the breakout, and now let's go to a smaller time frame to refine and look for clues. And price will always leave clues, guys. Like for example, what do you see over here, guys? With this key level, you know, price has rejected this perfectly, right? We get a bearish candle here, but then the buyers push it back up, so you can call it pretty much a fake out. But what happens? The sellers come in and take control. So now this breakout here is valid, right? Sellers have, you know, taken control over the buyers. Now buyers are still giving a bit of a fight. They have pushed the market up, but none of the candles close above the key level. Now the wicks, that's why they've created a wick here and a wick here, which, in, you know, it's a rejection. Now these are strong rejections, guys. You can take an entry straight after this bullish candle here. The volume of the, look at the body of, let me just zoom in more so you can see more clearly. Look at the body of this bullish candle. This one and this one, they were both rejection wicks, but look at the body size. This one is much smaller. The buyers are becoming weaker and weaker. You can just take an entry after this one and let market do its thing. If you was to lose the trade, it is all good, right? Now this video, I want to be okay. So maximizing, you know, you got to first of all do the homework, guys. It's all about doing the homework. Now with this trade, as you can see here, this is a 1 to 13, right? So 1 to 5. Now what you can do is pretty much is, you know, use a trailing stop loss. Now what I normally do is, and what I normally show in the mentorship as well, I'm just going to give it a free tip here, guys. When a trade goes pretty much to 1 to 2, let's just put it at 1 to 2, put your stop loss to break even. If it comes back on you, it's all good. Just let the rest of the trade run, right? So that's the whole point. Now if I even show you this one here, I mean, look at this, how slow it is. I mean, it's only $35 for the trade, but it's all good. Now I'm just going to be waiting, and that's all I'm going to be doing. Now if this trade goes, I mean, this went, I think it went to about almost 2%, I can't remember exactly. I still, you know, I didn't put it at break even because I'm looking for a 1 to 8 on oil. So if it goes to around 1 to 3, 1 to 4, then I will put this trade at break even, because by doing the homework from the past, looking at the past trades, it shouldn't be coming back to me. Once it's that much far ahead, shot far ahead, it should, you know, the price, it shouldn't be coming back to, and if it does, there's a high chance that this trade is going to go against me. Now let's come back to the point. Okay, what this does one trick, right? Just let it go 1 to 2, 1 to 3, just put your trade at break even and let it just, and what does this do? What do I mean by maximizing the trade, right? You become stress free. You have the patience to hold the trade longer, and that's what it's all about. When you have the patience to hold the trade longer, then it creates that level of detachment from the markets, and that's what it's all about as well. Now we're gonna let price keep going. I mean, then the next opportunity comes over here, but this is a losing trade. So but what I'm gonna do is, let me just remove this. Just got my iPad in the way, I couldn't just see that to cross that off. Okay, so let's go on a bigger time frame and go back. Now with all these trades over here, guys, a way to maximize these trades, I mean, look at these winners here, guys, insane. 1 to 14, 1 to 8, what's this one, 1 to 6. Now how would I know is, you know, this was going to turn to a 1 to 14? How would I know this one's going to be a 1 to 14? You know, how would you know this? Well, the honest answer is you don't. The best way you can only do, what you can do is, on average, I know the market's giving me, let's just say in this case here, 1 to 6 on average, right? What I want to do is, I want to first of all draw the correct key levels and then take the correct entries, but your entries are only going to be good as your key levels. If you got bad key levels, then of course your entries are going to be poor as well. Once I'm in the trade, guys, I'm just going to keep on taking that 1 to 6. I don't care if it goes to a 1 to 14. I don't want the full cake, I just want a piece of the cake, and that's what this is all about, you know. Now once this trade, now of course it looks attractive, and when I draw in the charts and like, oh my god, it went to a 1 to 14, but we've got to be realistic. How many times does it go to a 1 to 14? You know, once over here, once over here, that's 2 times, maybe here 3 times, maybe here 4 times, but it's not going to happen all the time. Now you got to look at it from this point of angle, right? Do I want 4 1 to 14s, or do I want pretty much all 1 to 6s? Does that make sense? Would you rather have 4 1 to 14s or 10? I'm just gonna, I know it's not possible to have 10 1 to 6s, but just gonna give an example, right? So even if you do the maths, 14 28 56, right? So 14 times 4, but then if I have pretty much 10 6s, that's 60. So I mean, I know it's not that much of a difference, but still, trust me, mentally it will play a huge part. And I mean, I can even see a winner here. This just flies all the way up here. That might even be a 1 to 14. Another one's here, flies all the way up. That might be a 1 to 14 as well. So I mean, so far though, like, even I'm happy with the 1 to 8s. Let's see. I mean, I can even look at these and I could just tell on small time frames they're going to give huge rejections, but this just goes on, guys. This is like gold is insane. 1 to 8, I mean I'll take the 1 to 8, you know, 1 to 6, 1 to 8, and but I mean, the whole idea is, right, the best way to maximize the trade, guys, is to take what the market's mostly giving you. That's the simplest way I can say, you know. That's the way you're gonna maximize your strategy, maximize your psychology, maximize, you know, your trades, is just to take what the market's giving you the most. And be realistic as well. This is not a short-term thing, my guys. This is not a get-rich-quick scheme. It's going to take time. You have to be realistic. And once you have once you're in the live trade, guys, even putting a trade at break even, you know, even if you become from unprofitable to break even, huge milestone, guys, huge milestone. And from then it's just that one little small step where it can just take you from break even profitability. It can be just that one little small shift, but it all starts with having a good strategy, very good risk management, combined with even good psychology. But risk management is always king. I hope this video is helpful, guys. By the way, if you want to make sure you hit that like and subscribe, share, comment, and if you are interested in the one-to-one mentorship, guys, the link will be in the video description. Come direct me, message me one-to-one. Yeah, take care, and I'm out.